How's it going, you guys? Big Fish FX back with another video, just to clarify a few things that's been going on with Coinbase and the whole bankruptcy. Have a lot of people panicking recently with the comments. Brian Armstrong and and Coinbase have a lot of people panicking recently. The comments saying that, you know, if they go bankrupt, there's a chance that users who are using Coinbase may have their crypto or their crypto funds wiped out clean. So let's go into detail to see exactly what's going on. I did make a video on this before. The music on the video, the background was pretty loud, so I don't know if you guys could hear. So I'm just gonna make this video and replace the other video, and so you can get a clear understanding of what's really going on, right? So basically, this is fortune.com, but this information can be found on any finance website, because this is not, you know, fortune.com is not the only website reporting this. It's just the one that I'm going to break through, so kind of give you guys an idea and an understanding of what's really going on. So Coinbase earnings were bad. So the Q1, you know, the first quarter earnings were way lower than expected, and they were like 27% lower than the first quarter earnings of 2021. And so the earnings were pretty terrible. You know, business is business. There's gains and there's losses. There's ways to come back from these situations. But yeah, they were pretty bad. Worse still, the crypto exchange is now warning that bankruptcy could wipe out user funds. So let's break down what this actually means. So let's go down. Hidden away in Coinbase global disappointing first quarter earnings report, in which the U.S. Largest cryptocurrency reported a quarterly loss of $430 million and a 19% drop in monthly users. So basically, people are leaving Coinbase. Now, there are two factors that I would pretty much guess. You know, I'm not gonna say this is what it is, but guessing from what's been going on, I can kind of put my finger on two things, right? The first factor I would guess is, it's just basically, it is what it is. You know, it's business. Their business is built on cryptocurrency, right? It's the same as when, you know, you have product that is needed, your business booms. But then when you have product that is not needed and it's not in season, you know, your business it's just not gonna boom. So it's similar to, let's say, if there's a seasonal business. If you have a Christmas shop, you're not gonna open your Christmas shop during Valentine's Day, or February, or even March. You're not gonna open it and expect the same revenue that you would get in December and November. So it's business. At the end of the day, this is a cryptocurrency-based business, cryptocurrency-based company. And recently, cryptocurrency has been taking a hit. You could take a look at Bitcoin charts. You can take a look at Ethereum charts. And both of them, the two big giants in the cryptocurrency space, they've been bleeding for the past months, right? I believe it was since December. Since December, they started dropping. They really started dropping around January, and you know, until around now. So now I can show you a chart just to give you an update of where they are now. Just one moment. So right now I'm on tradeview.com, which I use to trade forex and chart or markup and analyze my charts when trading forex and cryptocurrency. So as you can see, Bitcoin has been taking a hit. Right now we're at 29,281 or 290, around that range. and it's expected to keep dropping because this zone right here has not been really broken yet. Liquidity is being grabbed right here, or orders have been liquidated right there, and it's expected to keep dropping, right? So this is not just on the fundamental aspect, but we could take a look on the technical analysis aspect. I'm not going to break this down. If you trade and you understand market structure, you understand the liquidity grabs, you understand the Fibonacci, you can see and you can kind of predict where it's likely set to go. So it's expected to keep dropping. If it don't, it don't, but it is expected to keep dropping. So it's been pretty tough for crypto, right? For cryptocurrency. And I have a whole nother video. Check out the video, The Death of Bitcoin, The Death of Old Bitcoin, which is my theory of what's going on, which I know what's going on. Check out that video so you can actually see what's really happening. So Bitcoin and Ethereum pretty much mirror each other. And this is using Coinbase's feed. Ironically, we're talking about Coinbase. So they basically mirror each other, right? So right now Ethereum is at 2,000, around 2,000 even. So if you take a look, you'll see around November is when it started dropping, and from there it never really recovered. There was a nice retracement from the bear expansion, but it never really recovered. So Coinbase, whenever cryptocurrency is getting hit like this, users are leaving Coinbase and their exchanges and they're taking their money out. So the first factor is that, you know what I'm saying? Like, people are literally not trying to trade anymore. They're scared that, you know, they're going to be losing money. So they're taking money out and they're just not playing with the app anymore. So there's a decrease in monthly users. And which it makes sense, you know, at around these times, we really can't play with money like that. Inflation going up, everyone needs to, you know, everyone is focused on securing as much funds as they can. And seeing cryptocurrency tank like it's tanking, it causes panic, and people are withdrawing their funds. They're transferring their cryptocurrency into USD, or if they're like in different countries to whatever currency that they use, they're transferring it to their actual currency, their fiat, and they're leaving crypto alone. So that leaves, you know, that sets Coinbase for a low rate of monthly users. So you see the 19% drop. Another thing is, individuals probably just don't like Coinbase. You know, there's some individuals who just don't like Coinbase. Some individuals who switch into hard wallets, cold wallets, and some individuals who just use they're switching to other cryptocurrency exchanges, crypto.com, for example, Kraken, Binance, and all of that. So I just believe those are the two factors, right? So if we just continue going, in the event the crypto exchange goes bankrupt, Coinbase says, so this is coming from Coinbase, this is what they're saying, its users might lose all the cryptocurrency stored in their accounts too. That's what they are saying. They're saying this. So what that means is, just to clarify, they're saying in the event they go bankrupt. They're not saying they're going bankrupt, but they're saying in the event that they do go bankrupt, users might lose all the cryptocurrency stored in their accounts. So notice they said might lose all the cryptocurrency. They didn't say funds. They didn't say your money. So please understand the difference. If you have a cryptocurrency wallet using their platform, then your wallet is at risk if they should go bankrupt, or may be at risk if they should go bankrupt. If you have funds sitting in your USD wallet, your fiat is just sitting as USD, and you have not yet exchanged it or put it into a cryptocurrency wallet within their platform, that those funds are insured. They're insured by FDIC. Up to $250,000 is insured. It's like the bank, you know, when you put your money in the bank, up to $250,000 typically is insured. Anything over that is not insured. In case the bank like fails, or you know, if the bank fails, then you know your money is safe up to $250,000. So what this is saying is your fiat won't be touched up to $250,000, but your cryptocurrency wallets can be wiped out, because now they become it's like they're caught in the crossfire, you know, casualty of war. they're caught in the crossfire. So being that they're actually part of the actual platform, you know, it might end up being wiped out. The data might end up being wiped out, because you have to keep in mind that cryptocurrency isn't seen as a legal tender like the fiat, like the dollar is seen, or not seen, but it's just not a legal tender. So it's not being covered. So with that being said, be very careful with exchanges, because you never know what might happen, right? And I'll get to that later. So now Coinbase said in its earnings report Tuesday that it holds $256 billion in both fiat currencies and cryptocurrencies on behalf of its customers. Yet the exchange noted that in the event it ever declared bankruptcy, the crypto assets we hold in custody on behalf of our customers. So notice they say the crypto assets. They didn't say your money. They didn't say your funds. The crypto assets, the assets that you have as cryptocurrency. So that's everything from Bitcoin, Ethereum, Shiba, Dogecoin, whatever you trade. Those could be subject to bankruptcy proceedings. Coinbase users would become general unsecured creditors, meaning that they have no right to claim any specific property from the exchange in proceeding, because that's not, it's basically their property now. So their funds would become inaccessible. Funds as in that cryptocurrency, right? That shouldn't happen. So basically, an individual's ownership of cryptocurrency is supposed to be immutable and absolute. That's one of the key selling points touted by blockchain evangelists everywhere, because that's what people typically say, right? But when a user creates a coin, this is the takeaway right here, right? You have to understand what's going on. But when a user creates a Coinbase account, they often end up storing their cryptocurrency in a wallet controlled by Coinbase. So this wallet, basically Coinbase is the middleman when it comes to you buying your crypto and your assets, right? Coinbase is being used as a middleman. It's the same thing if you trust someone to go deliver something, right? And that person is the middleman instead of you doing it yourself. And he never gets to that destination. Something happened to him while on the road. That's it. The product that you have him go deliver is done with. The middleman with the actual product, it's over with. It's caught in the crossfire of whatever happened to the guy while headed to the destination. So you have to understand Coinbase is a middleman. It operates as a middleman. Same thing as other companies, you know, like Uber is a middleman, Amazon the middleman. Like all these companies work as the middleman. They're the in-betweens of things that you can actually get done yourself. Just want to kind of put that out there. So basically, which means, so they often end up storing their cryptocurrency in a wallet controlled by Coinbase, which means the individual is giving away at least part of their control over their own funds, right? Like I said, like you're giving away the power. It's not independently yours. You know what I'm saying? You're signing up for a cryptocurrency wallet through a middleman. Access to a crypto wallet is governed by a private key. So this is another takeaway. Crypto wallets, the access to crypto wallets are governed by private keys. These keys tend to be long and complicated. So, which is a long string of characters that effectively act as as a password. So, without the key, the cryptocurrency in the wallet cannot be accessed. On Coinbase, this is another thing you should keep in mind. On Coinbase, the exchange holds the private key and lets users access the funds within the wallet using a more conventional password. So they hold the private key. You never get your private key of the wallet that you actually establish within the platform. You only set up your email address, your login information being your email address and the password, but they never give you the private key. Which basically you're giving up your ownership in a way, but you don't know you're doing that. You can trust the exchange to do right with the ownership or with your key and your assets. You can trust it to do right, but at the end of the day, you want to always have that ownership just in case, just to be safe, just in case something might happen. If you don't have control of what's going on with the company, you'll be caught in the crossfire, and you don't want that. So the setup makes it easier for users to enter their accounts by remembering an easier password. Yet it means that when push comes to shove, Coinbase ultimately governs whether a user gets access to those assets, which is what I just said. You basically giving your right away of those assets because you don't have the key to even access those assets if Coinbase do not give you permission to do so. So in comments shared on Twitter, Coinbase CEO, I'll go on Twitter real soon. Coinbase CEO and founder Brian Armstrong said the exchange had no risk of bankruptcy. So he's just clearing everything up, and that the disclosure was made due to new rules set by the U.S. Securities and Exchange Commission, the SEC, regarding public companies that hold crypto assets on behalf of others. So they're saying that they only give us this heads up because of the new rules that the SEC have put in place. They kind of want to protect themselves and let people know, get the awareness out. So this disclosure makes sense in that these legal protections have not been tested in court for crypto assets specifically, and it is possible, however unlikely, that a court would decide to consider customer assets as part of the company in bankruptcy proceedings, even if it harmed consumers. So this Armstrong, so that's Brian Armstrong. So he did say your funds are safe at Coinbase. Of course he can say that, that's his business. But but yeah, he may be right, so I'm not taking anything away from the man. He may be very ethical in his business, but you never know what might happen, right? Coinbase does offer, they do offer a self-custody wallet titled Coinbase Wallet, in which users know their private keys. So you do have the option where you can know your private key. And a Coinbase wallet or any crypto wallet is not required to trade crypto on Coinbase. So you're not required to use that exchange to trade crypto and store into that wallet. But by admitting that crypto assets aren't secure in the event of a bankruptcy, Coinbase is also highlighting a major difference between storing your funds with the blockchain exchanges versus keeping cash with traditional banks. I don't know how y'all feel about that. There's many different opinions about that. A lot of people are saying don't keep money in the banks. A lot of people say they'd rather keep money in the bank. But I'm not going to get into none of that stuff. Bank accounts in the United States are protected by deposit insurance offered by the Federal Deposit Insurance Corporation, so the FDIC. In the event a bank fails, the FDIC steps in to protect deposits up to $250,000, preventing depositors from going broke along with the bank. Crypto exchanges do not offer that same protection, which is the primary reason why crypto enthusiasts advise investors to hold their cryptocurrency in a personal wallet rather than on an exchange. So crypto wallets through an exchange, crypto wallets period, they're not insured. And I already went over that because they're not a legal tender. You know what I'm saying? They're not legal money. They're not legal currency that can be used to buy stuff. It's not legal. So they're not covered by this. So it's always best to have a personal wallet, a hard wallet, a cold wallet, rather than keeping your assets in a crypto wallet via an exchange. Always good to have your cold wallet. So this is just going on it dropping, the decline. Coinbase warned that the trading volume was likely to decline further in the current quarter. Yeah, it's gonna keep tanking. You see what happened to Luna, and other cryptocurrencies. They're pretty much, they're gone. You know what I'm saying? They're hitting the floor. So that was the article. You can check it out. I'll leave a link in the description of the article. It's on fortune.com. Not sure if you already read it, but check that out. Now, this is another article, Financial Geek, just basically going into Coinbase FDIC insured, right? So Coinbase is FDIC insured. The fiat value of Coinbase wallet. Hold on. I thought I heard something. The fiat value of your Coinbase wallet will be insured up to $250,000. So this is the same thing I just went over. In the same way that a traditional bank insures your deposits. This is because a large portion of Coinbase's customer deposits are held by custodial banks who are insured by FDIC. So a large portion of the money that you have, sitting as fiat in your Coinbase account, they're held by actual banks, right? And those banks are insured by FDIC. If one of these banks were to fail, Coinbase customers would have their funds protected by what is known as a pass-through coverage by FDIC. So that's because, the bank is the one that's holding the money. So think of it like this. You entrusted Coinbase with your money, and Coinbase entrusted a U.S. bank with their money. Exactly. So you gave Coinbase is a middleman, and the bank is another middleman. You see how many times your money is being passed around? Therefore, you technically also entrust U.S. bank with your money and earn FDIC protection. Please note that Coinbase can only receive FDIC protection in the event that it keeps accurate customer records and upon determination of the FDIC as receiver at the time of receivership of a bank holding a custodial account. So it's up to them. They have to make sure they have your information correct. So what is FDIC? You can look into that some more. We're not going to go into that definition. What does Coinbase do with your money? So until you purchase cryptocurrency, the cash you have sitting in your Coinbase account is backed by FDIC, which is what I just said. Until you actually buy or exchange your USD or your currency or your fiat for you exchange it to get an asset, a crypto asset, your funds are FDIC, they're insured, right? They're backed by FDIC. This is a bank level protection for your fiat, and that can give you confidence that your fiat will be there in the unlikely event of a Coinbase breach or dissolution. So how does Coinbase get this level of FDIC protection? So this goes into how banking works, right? It may come to a surprise to some, but when you put your money into a savings account at a bank, your money is not just sitting there and waiting until you are ready to withdraw. We know this in our trading community. I'm pretty sure you know this, but when you actually deposit funds into your savings account or into your checking account or whatever, that money isn't really there. You know what I'm saying? It's not just going to sit there. The bank takes your deposit and immediately puts it to work. So your bank is going to trade. The bank trades your money. Right? Not only that, but it lends your money to other people. And it plays on interest. So They may lend it to other, I just said that. They may lend it to other clients. And I just said this, they may invest it. So they play with your money. And this is the thing, right? Let's say if you deposit $10,000 into your account, into your bank account, and they take your $10,000, or let's say they take $9,000, or they take $9,999 and leave $1. They take that money, and what they do is they put the money to work. This is why you never want to have money sitting around. You always want to put your money to work. Think like a bank. That's another topic. Think like a bank. Always have your money to work. A lot of people, the richest people, don't have money just sitting around. Money is being put to work and feeding assets to bring in more money, and it keeps cycling. But that's another topic. But think of it like this. If there's $250,000, if there's $10,000 you put in your savings account or checking account, the bank goes in and flip that money. It goes in, put it to work. So it lends out, it lends your money, and with it lending your money, there's interest applied to it. So when the individual who has lent the money or lended the money or given the money, that individual has to pay interest. You know what I'm saying? He had to pay interest. So when he paid the money back, he has to pay extra. The extra that the bank make, that's how the bank make profit. So your money, the base, if I lend you $10,000 and I say, okay, well, you gotta pay me, when you pay me back, you gotta pay me $15,000. I know that's pretty harsh, but I mean, it depends on how long I'll give you to give me that and what the percentage is. So the APR and all of that. But if I say that $5,000 now, the $15,000 I'm getting to you, I'm getting the initial $10,000 that another customer gave to me, the bank, and then I'm pocketing the $5,000 from you. That's my profit. So that's how they make their money. So basically, if I end up losing your $10,000, it's insured by the $250,000 of FDIC insurance, right? So it's insured. So I don't, so regardless, I'm not going to have a problem because your money is insured. So I'm just taking a risk to flip it to make it more. But if I end up losing your money is already insured. So yeah, regardless of what the bank does with your money, it's FDIC backing guarantees that whenever you are ready to make a withdrawal, it will have enough cash on hand to guarantee your request. See? I didn't even read this, but I'm just going over it. So Coinbase does the same thing with Fiat Deposit. When you make a deposit on Coinbase, the platform may do one of several things with your money. It combines your money with that of other customers and placed in a custodial account with a U.S. bank. So he might just take the money, put it in a pool with everyone else's money, and put it in the bank account. Hold on. In a bank account. So, or it would invest your money in liquid U.S. treasuries. So it would invest your money to try to make money back, or place it in, or try to make more money out of it, or place it in U.S. denominated money market funds in accordance with state money transmitter laws. While it may be a bit unsettling that Coinbase takes your fiat and farms it out, it's not that scary for a couple of reasons. We went over the FDIC thing. Like, your funds are backed, so you don't have nothing to worry about. Even though Coinbase is putting your deposits to work, it holds all customer funds separate from Coinbase funds. Revenue earns through core business. That's Coinbase funds. It will never use customer deposits to pay operating expenses, which is bad business if it did that, right? Any customer funds held in a custodial account are done so with banks insured by FDIC. This helps the platform gain what is known as a pass-through. We just went over that. It guarantees the insurance. if any bank that held Coinbase custodial accounts were to fail, the FDIC coverage would apply to Coinbase customers. So we already went over this. Your crypto is not FDIC insured because it's not a legal tender. It's not legal tender. It's not backed by the government, right? So that's the other thing, right? So these are the other exchanges that have FDIC insurance. So if you want to read up on this, there's a link in the description. You can read up on that. Everything else is basically, this is Brian Armstrong. This is what he was saying about what was going on, or what, the scare. There is some noise about a disclosure we made in our 10Q today about how we hold crypto assets. Your funds are safe at Coinbase just as they always been. So he's just basically explaining what's going on, which I think he did pretty much a good job explaining this. We have no risk of bankruptcy. However, we included a new risk factor based on the SEC requirement called SAB 121, which is a newly required disclosure for public companies that hold crypto assets for third parties. So they just basically had to do this, or felt the need to do it, so they can kind of give you that awareness, because there's a new risk factor based on the SEC requirements. So you can go to his Twitter and kind of read through all this. This video is already 30 minutes long. I'm pretty sure you don't want to you don't want to stay up on here. Keep watching it. On Coinbase website, you can look at the 22 quarterly earnings. The Q10, the 10Q is right here to actually see exactly what what they made and what was projected. You can get that. That's on investor.coinbase.com, and I'll put a link in the description of that as well. Now, the last thing is, if you're looking to actually get a physical wallet and move out of the, or just not just move entirely from an exchange, there are a few physical wallets that you can get or you can purchase on Amazon. One is Ledger, which is one of the pretty solid ones. And yeah, it's based on what you need it for. Manage up to 3 crypto wallets, or 3 crypto at a time. Manage up to 100 crypto at a time. Manage up to 100 crypto at a time. So it's basically based on your needs. So if you're like a hardcore crypto trader, there's these two are pretty solid. If you're just someone who trade like 3 assets, you could get this right here. But this is pretty good stuff, just in case if you do want to move to a more hard wallet direction versus the riskiness of an exchange. And that's pretty much it. I'll leave the links of these 3 in the description as well, so you can kind of browse to see if you want to even play with these. But that was I just wanted to clarify exactly what was going on and what it really meant, and break down how these exchanges work and how the money work and how the insurance work. So please like, share, subscribe. Big Fish FX. Comment, leave your comments, whatever other videos you want me to break down. I'll break down anything else that may be confusing to you. And happy trading. You guys have a wonderful, 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 wonderful and beautiful day.